Welcome to the 230 Factor.
Let's actually welcome in Mohit Mirchandani, Head of Equity at Taurus Mutual Fund, who joins us to give us his views on the market as we stand right now. Mohit, welcome to this show. Afternoon. Prashant this side. What do you make of these erratic movements, erratic but still very, very tightly range bound?
Since we made those October lows on the end of day basis, we've actually just chopped around between this 2500 to 3100 range, and it does look like we're going to, hang around there for a bit till we get a major trigger that could move us in one direction or another. So in the meantime, we play with the range and live with it.
Mohit, afternoon. Namrata also joining in. In terms of stocks now, it's becoming increasingly stock-specific action. You got Spice, which moves up on rumors. Polaris had a bit of a surge. Today you've got media stocks like WWIL and Dish TV moving very strongly. What explains this? Without getting into stock-specific stories, and I understand if you don't want to comment on individual names, but is this market just ripe for any kind of speculation or rumors?
Yeah, typically after you've seen this kind of a value destruction, there are a lot of promoters that come out with news events that could drive the stock in one direction or another. So you could have buybacks, you could have acquisitions, money is getting a little cheaper, the risk premium is still there, but I think at some point promoters realize that they're better off buying their own stock if the markets are not going to give them the kind of valuation they think they deserve. There could be debt restructuring. So at this stage where we are clearly in a downtrend and we are playing the trading range, it is going to be news driven around specific stocks that will cause these jerky movements one way or another.
Do you think it's become completely punter driven, jobber driven sort of a market, Mohit, and it's going to remain like that? Because look at the names which actually go up in a flurry, and they do go up in a pack. It's one sector one day. It was mid-cap IT yesterday. Today it's a couple of Z Group stocks which are moving up. Before that it was Spice Communication. You think that kind of action will dominate for the next couple of at least in the foreseeable future, now that most of the triggers are behind us, be it earnings and other such news flow?
Yeah, I think we know Q4 numbers are probably not going to be any better than what we had in Q3, but those numbers are going to come out a little later, probably April onwards we start seeing that, and I suspect that might cause the next trigger to break out of this range 25 to 31, 3200. But between now and then, we might actually get what you just mentioned, which is stock-specific action. The scary part is that the quality of names that are now beginning to show a lot of interest is not very encouraging, because those are typically names that are very, very punter-driven. So I'm not particularly confident with the kind of action we are seeing. Having said that, there are some segments of the market where even today, based on fundamental bottom-up approach, you can find good stocks at good values with sound financials, and I think that's a safer way to play the markets from a fund manager's standpoint, and that's what we are doing at Taurus.
Okay, a quick mention, Satyam board meet has been postponed to tomorrow, or rather will be continuing into tomorrow as well. Has the market got Satyam and the entire episode out of its system now? I'm not talking about Satyam Computer, the stock itself, but the market perception. I know there was a divided house there. Many believe there will be a near-term, a knee-jerk reaction from institutional investors on how they look into India. And then many believe that there'll be lots of corporate governance disclosures coming in. Companies will come in and announce everything. It happened on the pledging side, but nothing radical really came in from any of the listed companies.
Yeah, actually, I would actually take that as a little encouraging, because after the Satyam episode, we had one big down day and there was no follow-up selling to that, so to say. We haven't broken that 2500 low which we've made on 2 occasions now. So despite the Satyam event coming out, despite the Q3 numbers not being that good, we've held the lower end of that range. So that's the encouraging side of it. Back to corporate governance issues, disclosures, I think that's a phenomenon across the globe. I don't think we can single out India as India for that kind of corporate governance. We've seen it in the US, we've seen it in Europe. So I don't see that as too big of an issue as being an India-specific phenomenon.
Okay, 7.5% off on Satyam Computers now. So the stock's actually sinking as we speak. Mohit, as a fund manager, would there be any corners in the market which you would be comfortable buying? Be it stocks perhaps which have been beaten down quite a lot. This morning we had a couple of people coming on and saying that they wouldn't mind looking at some of these real estate massively beaten down large cap real estate stocks, for instance, just because they have been beaten down that much, of course, economic environment notwithstanding. Do you have any thoughts on the matter? And if you could talk about some of the other sectors you wouldn't mind buying?
Sure. I'll address the first part of your question, which is beaten down sectors and therefore do they warrant purchases. I'm not sure I would generalize, as a rule of thumb that something's beaten down and therefore I buy. That really has to come down to individual stock specific macro factors and then translating it back to their financials and growth prospects. So in real estate, we as a house are not particularly optimistic. We think 2009 will be a difficult year as well. And so we would wait before we really take a closer look at some of those names. Having said that, the government has been proactive. They're trying to stimulate demand there. There's talk of low-cost housing. So once we see some of those measures begin to kick in, our view might change. But for the moment, that's where we stand on real estate. Second is, I didn't get, what's the second part of your question?
Anything else that you'd be comfortable buying, Mohit?
We are actually looking at certain pockets where we see value, we see decent visibility in terms of order books. They're probably going to stand to benefit from either availability of gas or lower raw material prices. Some of them have their finances lined up already. So, right now is not the time to be brave. We're just looking at names that have, all the dots in place. We're not going to attach any kind of discount to a PE for taking on a risk. We're going with what's clearly visible right now.
All right. Good luck doing that, Mohit Mirchandani. Many thanks for being with us on 230 Factor and sharing your views and perspectives. So visibility is a theme that will categorize most of the investments going forward. Okay,
we'll take a quick commercial break, come back with that story after this short break.